Hey guys, it's Carter. Welcome back to the channel. I hope you guys are all having a great and amazing day today. We have a very special episode, the top stocks under $100 for 2023. I'm super excited to break down this video. There's a lot of high quality picks, and at the end of this video, I break down my investment strategy, so make sure you guys stay tuned. And also, we are going to be doing a giveaway. Moo, the stockbroker that I use, sent me some merch, sent me some hats, they sent me some t-shirts. Now, how you guys enter is by going down, liking the video, and subscribing to the channel, and then comment done so I know that you guys did it. We're going to be doing this giveaway over the course of this month. We have about 3 t-shirts, 3 hats. So we're going to be doing this, so I'm super excited to do this with you guys. So I hope you guys all enjoyed the video. Make sure you guys do that giveaway right now. So let's jump into it. Now, personally, I think it's always smart to go into the month and year with some sort of game plan, some sort of strategy, so you guys can make as much money as possible. So starting off with stock number 1. Stock number 1 is a beautiful stock. It's Google, ticker symbol GOOGL. And I know a lot of people right now are saying, Carter, Google's absolutely getting obliterated. The stock is down well over 60% in value this year. And a lot of experts think that there is going to be some continuation for 2023. Here's my mindset. Google is a company that owns just about everything. They're heavily invested into AI, data, software, and the biggest thing is they have over $116 billion in cash. So if they ever go through a hard time or a hardship, they have enough cash to continue to grow and invest inside the business. Not to mention, personally, guys, I definitely think right now, underneath the $100 represents an absolute for sale sign to buy Google at a more affordable price. The reason why we've gotten sell-off in general with almost all these stocks is just because of the market conditions we're in right now. We have high interest rates, we have high inflation, and it's just an unstable time with conflict overseas. Energy prices have gone up, so it's just an uncertain time. With that, some certain stocks, some growth stocks have gotten sell-off like Google. So for me, I'm going to be buying as much as I can underneath this $100 price point. But it is a little bit of a higher risk, higher reward play for sure. So stock number 2 is AMD. AMD is Advanced Micro Devices. This is a computer and graphics card company. The reason why I love this company in general is because, one, we've seen extreme growth over the past pretty much 10 years with this company. The stock has gone from lows here at about $20 all the way up to over $100 per share in value with extreme growth. And yes, we've gotten some sell-off this year, but here's my mindset with AMD. Do you think we're getting more dependent on computers or less dependent? I think we're getting more and more dependent on technology each and every day. All of us carry technology. We don't like to admit it, but our cell phones, people don't realize how connected we are, and AMD is going to play a huge factor of that. And with the metaverse, getting more and more larger, I think AMD is also going to have a huge part of that, because in order to get online to the metaverse, you need a computer, which AMD makes. And for a stock that's only 73 bucks a share, it's a no-brainer for me. So the third stock that I'm going to be buying underneath this $100 price point is Disney, ticker symbol DIS. Guys, for me, Disney is a company that, yes, we've gotten some sell-off this year, we've gotten some volatility, but overall, my mindset is Disney is the media powerhouse. They're not going anywhere anytime soon, and what we've seen over the past couple of years is, one, they've been doing very well on box office movies. Their Disney Plus subscription's absolutely killing it, and with the reopening of all their parks, cruise lines, we're going to see some continuation where a lot of people get some buying pressure, into this stock. And they just changed their CEO back over to the previous CEO during all the lockdowns. So that guy was an absolute powerhouse when it comes to the parks and, the Disney Plus. So for me, pretty much I'm going to be investing into Disney. It's a company you don't have to worry about. Yes, a little more volatility, but overall, good stock, good pick to be diversified. And they own a whole bunch of stuff. They own ESPN, Lifetime, National Geographic, Marvel, Star Wars. They own a whole bunch in the media game. Alrighty, stock number 4 is Bank of America, ticker symbol BAC. Bank of America is a beautiful pick here. What we've seen over the past couple of years is a nice solid upward trend, which is always really good to see. And anytime you invest in a banking stock, you just want to make sure that 1, they have a relatively decent profit margin, 2, we've seen some growth, and 3 is other people investing in them. You know, Warren Buffett is a huge player into the Bank of America game, which was one of the reasons I wanted to look at this, and this is a good pick to stay diversified, get some dividends, and just have a little more value companies in your account where you don't have to worry about them going up and down, you know, at rapid rates. So before we jump into stock number 5, make sure you guys hit that like button, subscribe. So let's jump into it. So stock number 5 is ticker symbol KO. I think this is a staple investment in 2023. It's Coca-Cola. The reason why I love Coca-Cola is 1, last year they outperformed the index, which is always really strong to see. The company brought in well over $4 billion in the past quarter. So for me, it's a company you don't have to worry about. You know, it does well in recessions, bull markets, bear markets. It's not going to have as much growth compared to the companies like Google or Tesla or whatever. But what you'll have is just a little more stability in your account. And with stability comes, you know, just a solid growth. You don't have to worry about it. You don't have to worry about volatility, but overall you also get dividends. Coca-Cola is a dividend king. So this company has been paying a dividend for over 58 years, and they've been increasing their dividend payouts every single year. So it's a company, you get growth, you get dividends to get that passive income, and you just get a little more, stability in your account, which is always really strong to see. So, all right. Now that we talked about the top 5 stocks underneath the $100, now what is the best strategy for them? Really, you have 2 options. 1, you have a 1 lump sum investment, so you invest once and you just forget about it. The second option, and the option I would recommend, is something called dollar cost averaging. This is a way to invest to reduce your risk, your volatility levels, and as we get more sell-off with some of these stocks, you can average down those prices. So pretty much what you do is, instead of investing once, you invest consistently. You invest maybe weekly or bi-weekly or even monthly into some of these positions. The beauty of it is, as these stocks sell off, you're averaging down those share prices. So when the stock recovers, you're making a ton of money. This is a great way, and if the stock continues to go up, you have shares to make some cash, and it's just a strategy that I would recommend. So guys, I hope you guys all enjoyed the video. If you guys did, hit that like button, subscribe, and we will see you guys later. Remember to stay happy, guys, stay positive, and stay safe out there. And don't forget about that giveaway. Hit that like button, subscribe, and comment done so I know you guys did it. So we'll see you guys later.